Morning, I'm Daryl Jones, Director of Research at Hedgeye. Welcome to the Macro Show for January 9th, 2024. Macro themes today at 10 a.m., so I hope a lot of you can...
11
a.m., I apologize. So I hope a lot of you can join for that. Also a free show for some folks today, so thank you for joining. And with that, we will get right into it.
I made a mistake earlier this morning, too. We make so many mistakes all the time. Yeah. I said that our slide deck is only 350 slides. It's 360 slides, all right?
You just made another mistake.
And is it even longer?
Well, you said 350.
It's 360.
I thought it was one.
It's 160. I did it again.
Or did you do that on purpose?
Well, you know, I just wanted those that are watching this for free that don't like us to know that I do actually smile and laugh with my friend, Daryl Jones, of course. And I welcome all of you. Anyone who's here today, we're trying to get you to find a better way. So again, unlike the bullshit that you watch on CNBC, we are, by the way, the disruptor of that. We are here to help you preserve and protect your hard-earned capital so that you can compound returns over time, not cite year-to-date numbers in 2023 without citing the blow-ups you had in 2022 or in 2008, for that matter, when we started Hedgeye. So again, we have a long track record of helping you risk manage your hard-earned capital. Again, losing 5, 10, 20, 30, 50% of your capital is not an option here. We have plenty of things that were long. By the way, we have 34 different macro asset allocations, including Bitcoin, which will be in my top 3 things today. So this is what we generally start the show with, is the top 3 things in my notebook, which are, again, the summary of the process, the things that should be called out most specifically. As Benoit Mandelbrot would have taught any of you to do macro the way that we do it, it's the particular that matters at this particular point in cycle time. It's not the average of things or the simple moving monkey average of things or the valuations of things. It's what's happening in rate of change terms, again, up or down. So first, we're going to hit on global equities and Bitcoin, of course, as I said, and Apple. Global equities. So you get this uniquely American stock market pop, and we've had many of these. This is called an upside vol day, upside volatility day, which we'll get into as we go throughout the show. Again, that's when you have negative gamma. Okay, negative. When you hear the name, some of you that are new here, if you hear the word negative, you think down. You're thinking wrong. If gamma is negative, it just means that the direction of the wind is going to perpetuate, as I used a golf analogy today. If you have 3-club wind, for example, and you're hitting into it, it's not 100 yards, it's like 140 yards. So again, the direction of the wind perpetuates the direction of the day. And that's largely a function of the flow of the machine as it is today. It's not about valuations and simple moving averages. It's about where options are, where dealers are, where the 0 days to expiration options volume and flow is going. So again, pay attention to that. We had an upside vol day yesterday, so a big up day, in as much as you can have a big down day today. And then you flip a switch and you look at all these other markets in the world, which, you know, last I checked, I think we're old enough to remember that they still matter, like this big place called China. Look at the Hang Seng. I mean, the Hang Seng made a 1-year low. I mean, it's not like they came into Hong Kong this morning and said, wow, we should start chasing some Apple, because they don't have Apple, right? They don't have the mother of all bubbles. They don't have what everyone in America owns in their 401ks and their whatever accounts. They have what they own, which is the cycle. So again, China continues to be in an industrial recession. Europe reported being in an industrial recession again this morning. German industrial production growth was down almost 5% year over year, which is the 6th straight month of slowing, and it's an unequivocal disaster in economic terms. And even Spain figured that out. So Spain opened down, as we've highlighted in the last week. It's been the weaker of the signals in terms of European equity markets, whereas Germany's been relatively strong, and surprisingly so. Despite their industrial recession, you have the leader to the downside was, of course, Spain. But again, Kospi down, Dr. Kospi we call it, Dr. Copper down. All these things were down after a U.S. equity market update. Those are called divergences. If you haven't paid attention to them or you haven't noticed, we'll do that work for you. What else we got going on here? Bitcoin. So what's really bullish here, notwithstanding that it's disastrously bearish for the U.S. government, which we'll review at 11 o'clock, they just want to blow out this deficit and the debt for your kids and theirs for as far as the eye can see. You know, there's political safety in the short term, they think, in that, but Bitcoin's been one of the winners on part of that. There are a lot of reasons why Bitcoin go up and down. I don't even particularly care why on what they all are. But coming into yesterday, we've been buying the damn dips in Bitcoin, Amazon, XLG, which is large cap growth. And if you didn't know that, now you know. So yesterday on strength, what did I do? Sold some, and we would sell some Bitcoin because it's near the top end of the range. But again, the most powerful bullish trades and trends, that's how we define it, slide 9 in the deck, guys, so you can show people our definition. Immediate term trades are 3 weeks or less. Trends are 3 months or more, and then you have the long-term tail risks. You know, the most powerful signals that we have at Hedgeye is that when it says on your daily risk range sheet, bullish trend, and it's signaling higher highs in the risk range and a higher low on the daily and on the weeklies, those are the most bullish. So Bitcoin has been a very powerful one that just changed with a big higher low at 43,408 at the low end of the risk range. Point number 3 is Apple. Now, Apple is one of the most bearish things that you can find on that same pin sheet. So the risk range sheet says, you should have in particular noticed when Apple went from bullish trend, which was throughout all of pretty much November and December, to flipping to negative, and then now in bearish trend, and now showing lower lows in the risk range and a lower high at the top end of the range, with the top end of the range being inside of the trend level of 191. There's a lot that I said there. There's a lot that a lot of people that own Apple don't know anything about that I just said there, okay? Which includes the volatility of Apple, the vol of vol, okay? Look it up. You're probably not going to get a good definition from ChatGPT because I haven't put my codes inside that yet for anybody to steal. But that notwithstanding, the volatility of Apple's not where the VIX is. The VIX yesterday went out at 13. I think you know where that is. It's the VXAPL was closer to 25. Anything north of 21 is going to keep Apple from a price perspective, because our signal is price, volume, volatility, and the volatility of volatility. Oh yeah, you got that now. I know, Drawdown Josh Brown tell you all about that, right? No. Now, so again, what you want to pay attention to is where's that trend. If it's below 191, it's bearish. All rallies like yesterday in Apple were to be sold, and those are your top 3 things. Now, we do, unlike your local unreformed brokers, read books, okay? We apply what we're learning every day. I try to read a book every 10 days. We try to apply all that cutting edge behavioral, historical, mathematical. So when you look, slide 4, guys, on my deck, my process really involves reading in those three parts. That's where I'm like, if I have a bias, that's where I read, and I read a lot. Here's a great book that might get you going if you're an old wall type. Because people on Wall Street, they want, you made a great call. We don't make calls. We execute on the process. The right calls are born out of the right preparation, the right process, the right, again, behavior and demeanor. Should be no emotion in what you're doing. Again, the right execution, no matter what the herd, what the madness of crowds is doing. Can you imagine if I was under the gun on Twitter, under center, taking huts on the tulip mania? Like, Keith, how could you be missing this? No, I don't care, right? For a quarter century almost at this point, I've been working to preserve and protect my pile, and I'll buy what I damn well want to buy, okay? I'll buy what my process says to buy. I don't have to buy what they own. They all own it together, okay? So, this is a really good book. She does a great job. Sally Jenkins does, going through people who play the game at the highest level. What is their attitude? What is their process? And what you're going to find is that most of it has nothing to do with those shots that they make or those touchdowns that they make, like last night for Michigan. It has everything that they worked up to, and again, the discipline in staying with that process. So that's what you're going to learn from us. I've said this so many times. It's not for everyone. It's a lot easier to just give a talking point or look at a 50-day moving monkey chart. If it wasn't so easy to do that, why do you think so many people would do it? Okay, this is hard work. Arnold Schwarzenegger just wrote a book. You got to do the hard work, right? You got to do the hard work. It's really tough. And if it wasn't, more people would be doing it and not blowing up other people's hard-earned capital in years like 2022 or 2008. All right, so let's just get into it. What we also do right after this is I go through my notebook in terms of what's in the notebook and specific callouts, like the risk ranges that I just highlighted in Bitcoin or in anything else for that matter. These things are all written there. I just like to reinforce by writing it down. And I do encourage you to write it down. I would challenge you, I'll challenge anyone actually in the world, to line up with me every single day under center and go through everything that's in this notebook. Yeah, I'm a competitive guy. Yeah, that'd be good. I'd love to do that. Let's just do it a better way. I don't want to I don't waste any more time on moving monkeys. This is really important. Where's the risk range today? You should know what that is. I write it down every single night before I go to bed. 47.96. This would be inside of the all-time closing high. So this is a big fail here for the S&P 500. We're not short the S&P 500. We're short the Russell 2000. Far better short, okay? Because we're not monkeys, right? It's one thing. I love monkeys. Like, they're beautiful. They're very good to observe in the zoo. But again, we don't have to have a position in SPY monkey. If anything, it's a bullish trend today. So if you had to trade it, you'd trade it with a bullish bias, but you would have bought it, as I said on the macro show last Thursday. Last Thursday, after 4 straight down days, S&P 500 was closer to the low end of the risk range, and that's where you buy and cover, and that's what we did. If you don't believe that, I don't care. That's what we did. So people in this day and age, of course, need and want to believe what they need to have to be true. Us, it's all time-stamped. Okay? Every single move that I make is time-stamped. Every single purchase that I made back then, by the way, for the home team that understands this, that day I went to plus 11%, 0.1% net long, and I went to more longs and shorts for the first time this year in real-time alerts. That was Thursday, and now I'm back to, in real-time alerts, which is not a portfolio, 5 longs and 10 shorts. So again, I whip it around. Oh yeah, I use my process to do that. So again, if you're looking for shorts, something like Crocs on the open, we reviewed that on the call. If you haven't already done the hard work with your team, imagine being some of these bozos on TV. They don't even have a team, right? They just know everything. It's amazing. I have to listen to my team. I'm not that smart. So again, my teammates are smart. So Crocs, ONON on that bullshit rumor that some guy named Judah or something was saying on Twitter, saying that Tiger Woods, maybe he might as well have just said Michael Jordan's going to go to ONON. That stock was up on that. By the way, it's technically illegal to make stuff up like that. I don't know. We're going to look into that guy. But that Noah or Judah, some guy named, I forget, it was a guy. That's what McLean said. I don't know who this guy is, some guy. So again, you get opportunities. So again, instead of going with SPY monkey on the short side, why would I do that when it says bullish trend? I'll pick bearish trend stocks like Crocs, Capital One, COF, or ONON, right? You like stock picks? Oh, we got picks, but we got process, okay? It's when you put on your shorts. After yesterday, so for example, and we spent a lot of time on this, they're called the bear squeeze baskets, okay? Now, don't tell anybody about this, but there's this place called Goldman Sachs, and they create these baskets that their clients can buy. So when it's a short squeeze day, you want some juice, right? So yesterday, for example, the number one basket to the upside was what? Profitless what? Profitless tech. +3. You got to own that after a terrible, the worst start for tech to a year, of the modern era, or at least one of them. Oh, you got to buy the profitless stuff. No. So what they're trying to do there is get shorts to cover, and they tend to do that. Second highest best performing basket inside of the we call these factor exposures, was high retail sentiment. So if you don't know what that is, it's you, right? If you're not a user of Hedgeye or part of the community, you're probably a retail investor who owns Apple, Microsoft. They all own the same thing. Well, yesterday, look at high retail sentiment was up like almost 3.5% on the day. So it's like, oh, we all get to win again together. So our goal isn't to win with the crowd. It's to risk manage the crowd and win with our community. So again, if you look at yesterday, now Tier 1 Alpha is a content partner of ours. So again, if you look at their data yesterday, there's a beautiful chart that they show every single day that shows the contribution. Look at that, Eric Gendron on the switch. He's the guy that you can hear. He's kind of like our Wizard of Oz. So behind that curtain, you can find that those 3 stocks, NVIDIA, Apple, Microsoft, equaled 30% of yesterday's daily return on the S&P. If you just go to the MM7, we call the Magnificently Manipulated 7, MM7, those were 47% of the day. Right? And those were the worst places to be for 4 days last week. So what are you going to do with that? Well, one, you should know that. That's a real important thing to know because, again, being the uninformed volume is not a way to be. The other thing that I'd say, if you look at the bongo board yesterday, which we called the sector styles. Now, I talked about factor exposures. These are sector styles. If you think in the modern era that you can't know where gamma is, what a sector style is, or a factor exposure, and be able to rattle it off like I just did, you got to get better. Or we're just going to beat your ass. So again, this is what happened yesterday. We're short energy, by the way, which is great, so we're covering some of that. We had a nice trade on natural gas in and out of real-time alerts as well. But it's not day trading. It's, again, using the signals and using the process to make good decisions. So yesterday, the number one thing on the board would be probably the one to be getting rid of today, or at least selling some of, if you were so lucky to book some gains like me in XLG, which is, I'm not long XLK, but again, because it's a neutral trend, and I like bullish trends because I'm very picky. Very picky. So I bought that. So again, that's the kind of thing that lifted and you'd be a seller of on green. We sell on green, we buy on red. Monkeys chase on green, they freak out on red. Very big difference, right? So that's why, people, I could live in a lot of different places, maybe some psychiatric institution, some of you would suggest, but I don't live in a zoo. Nope. I go to work every day. I'm here. What else we got going on for you this morning? We call this thing called cross asset class volatility. Now, do you know what that is? Now, that's really important. The volatility of every single thing. If you don't know how to measure and map it, you just got to get better, right? Okay, so again, whether it's the MOVE index, that went out at 118. That's still bullish trend. If the volatility of something's bullish, that means the price of it is bearish, in this case on an immediate term trade basis, but again, and vice versa. So if the volatility is breaking down and bearish, then the price is bullish. So again, that's how that's defined, just FYI. Everything through high yield, which we're still short, but we covered a bunch of high yield the day before, and it bounced, and if it bounces today, I'll come back to the short side. You might see that in real-time alerts. Shorting junk bonds, going into a recession. Oh, did I mention that? It's 9:15, and I haven't mentioned that. Quad 4, which is a recessionary quad 4, back-to-back, January and February, that stands in sharp contrast to where we were in November, which is quad 1. That's called Goldilocks economically, where everybody thinks it's going to be rainbows, puppy dogs, and soft landings, okay? It's actually quite rare to actually have a soft landing. It's very popular in the current consensus vernacular, but our GDP estimates, which I'll review at 11 o'clock, are for back-to-back down months and then back-to-back down quarters. So all that happened last year was that government spending, in particular, was the big surprise. The government said, there's no recession, don't worry, we bore from your future to buy the jobs. We can show that a third of jobs that were added were government jobs. So again, no matter where you go, the recession's still coming. And in fact, I think that the market between August and October, and then the Fed had to pivot. Remember that? Like, we got to bail them out. And then now, starting really since December, the end of December, I think markets globally have certainly, commodities, this is this thing called the commodities market. You ever hear of that? So look at that. There's 19 components to this. People know what the Dow is, but they don't all know this, because CNBC would have to get live quotes or pay for them. I don't know what, but that's pretty decisively quad 4. That's called demand slowing, okay? That's what oil looks worse. Oil's gone down 25%. So again, and in Q3, where all these commodity charts put in big lower highs, GDP was +5, don't forget. So again, it's slowing to something less than 1 in the fourth quarter, and we have it slowing to negative in the first and the second quarter. So that's what I think about that. That's what the market thinks about that. Now here, one chart that I would say is the most, I'll spend some time on it at 11 o'clock. 1 month versus 3 month realized volatility. Here's the lesson, okay? I can't spend any more time than 30 seconds on this one. When the blue line breaks out above the red line, you're screwed if you're long. Okay, that's the summary right there. Okay, so pay attention to the relationship between 1 and 3 month vol. If you never listen to me ever again, because you can't afford it or you're already hating on me, it could be worse. I could be a Washington Huskies fan this morning. I mean, the fact of the matter is that is a call that I always make, and we always make money when that happens. So again, knocking on the door. Yeah. Did you know that 1 month realized volatility was up 7% yesterday? If you read Tier 1 Alpha, you would have known that. You should have known that anyway. What else we got going on for you this morning? The flip line for Gamma, by the way, for the S&P 500 is 47.48. If you don't know what that is, please look it up. Asia, I highlighted that. India was up a little bit. So, again, as opposed to Spy Monkey, we got a lot of go anywhere options. We're long last year, long India, uranium. We're long gold. Wow, lots of gold. So again, gold's up this morning. It's not down like Spy Monkey. There's a lot of things to be long here. Okay, so India was up a little bit last night. We're short Hong Kong against it. Your longs should always be bigger than your shorts. A lot of these things are in Hedgeye University. They're very good disciplines to have. It's like kind of like John Wooden. Like, do you know how to put on your socks and your shoes? When I look at the behavior out there, particularly on CNBC, I wouldn't consider that a given. These people don't even have models for things, never mind teammates. Okay, so this is important, real important thing to be paying attention to out there. Already talked about Europe. The breakdowns there haven't really manifested. We do have a long position of the Dutch. The Netherlands, the ETF for that is EWN. We have Quad 1 being forecasted there. They had a big election leaning to the right. I don't know if that's why or not. I don't really care why. It's just signaling bullish trade and trend. And of course, the quads are not Quad 4. On commodities, just again, gold's risk range is 2022. You had a huge buying opportunity yesterday. If you didn't buy it there, this may not be for you. If you can only buy when things are up, I'm not for you. Nope. We're not going to have a relationship that manifests. No. But if you can buy the damn dips in something that's bullish trade and trend like gold in Quad 4, we're going to have a real good relationship, and that's having a good start to the morning this morning. And if it didn't, doesn't matter. I'd still do the same thing. So if it's down intraday, I'd buy more. Yesterday in real-time alerts, it said buy GLD, so that's pretty straightforward on that. 10-year yield risk range, one of the most important risk ranges on the page. Dropped a little bit, Jonesy, on the low end and went up a little bit on the high end of the range. So 378 to 408 on the 10-year yield. That's your new risk range there. JGB 10-year yield got smoked, and that really helped Japanese equities. So I'm going to be shorting some Japanese equities today. I'd say that a 34-year high is probably a pretty good price. And we were long Japan for all of last year, pretty much all of last year. So we're going to review why we're shorting Japan against long India. At 11 o'clock, there's so many places to create and deliver alpha in your accounts again, and these are places that most people don't pay attention to, which includes being long the British pound against the dollar, for example. We talked about crypto, and a good spot to take some questions.
Okay, I just wanted to highlight one thing that you didn't really see in the mainstream media today, but Felix brought it up. He's out in obviously Las Vegas covering global tech now, but Samsung profit warning. Ooh. You didn't really see that anywhere. Samsung is the 22nd largest company in the world, right? Operating profits down 35%. Part of it is obviously DRAM, but big focus was on their warning was also global consumer weakness, right?
And he's at the Consumer Electronics Show in Vegas. Felix Wong is our head of global tech, and he also mentioned LG, their weakness. And then I said, Felix, there's another company called Apple that has 0% growth prior to December being a worse month. December's data got slower versus November. So when Apple says that, you shouldn't be surprised, right? You notice how all of Wall Street downgraded the stock after their compensation calendar turned at the end of the year? Everybody knew that Apple's business was weak, right? Everybody's going to know at CES that Apple's business and Samsung's business is weak. What I find to be fascinating, and I said this on the call, is that one of the many narratives you're going to hear on CNBC is that, oh, but you just buy big cap tech because that's where the profits are. No, some, yes. NVIDIA for sure. There's plenty of stocks here that we're long in the risk range product. We also have the momentum tracker product that have all Mag 7. So you'd be long Google, in particular that one has been great. Netflix is bullish. Everything's bullish trend other than Apple currently. And NVIDIA's obviously bullish trend, hitting higher highs. That's super bullish. But everybody knows NVIDIA, God help us all if NVIDIA's business slows. Imagine that ever happens, like in the second quarter this year. But again, I digress. There are things that are accelerating and there are things that are decelerating. But broadly, profits, the Russell 2000, for example, its profits year over year are negative, right? For the third quarter in a row. There's a lot of bullshit out there. We'll highlight this at 11 o'clock as well. You go to the NFIB small business data, which is 99% of businesses in America are not Apple, right? Again, they're small, medium-sized businesses. 85% of those CEOs will say are in a recession, and 90+% of them are telling you that their profits are slowing. So a lot of what you hear throughout the day is bullshit, right? It reflects the color of the screen, which is called the mother of all bubbles behavior. It really started coming out of the pandemic when you bring in a whole new cattle class of people. Some of you, no offense, I would never do that, like you, that don't have any fucking idea what you're doing, right? But you like the color on the screen, that go up, and you all own it together, and as long as people don't say anything negative, it's good. Remember crypto before all the fraud? So again and again and again, I want to make money as much as you do, probably more. But I actually want to save money more than most people do so that I can make money and compound it. And I really do think that that's probably the biggest divergence right now, Jonesy, is that mostly everyone who runs a real business in this country is saying exactly what I just said. And if you want to go listen to the opposite of that, go watch the Cartoon Network.
Yeah, very true. So, one of the themes today is debt and deficits with the focus on the U.S. Interesting data point from Europe, 43 billion in government bond sales coming down the pike today, woo, which is a daily record for Europe. So it's not just a U.S. problem. This is like a global problem with these debt and deficits, all this pro-cyclical spending.
Yeah, it's, and Janet calls it in the U.S., which will focus, it's not just the big G, it's the big J. Actually, there are two of them, Jerome and Janet. Jerome pandered to Wall Street, probably got invited to some nice parties on yachts. Who knows what got him to go dovish all of a sudden? Inflation, last I checked, is not at 2, it's at 3 something. And by the way, we still think on Thursday it'll be north of 3. the big J, it's called the Q, you know what the QRA is, Jonesy? We're going to review these deep secrets of the state on the macro themes.
QRA, I don't know.
It's called the Quarterly Refunding Announcement by Janet Yellen. The QRA. Now you got QE, which is Jerome. They tried to, you had to stop with that, and then you had to tell everyone that you could cut again. That was a big thing for Wall Street. They really needed that because they couldn't deal with a recession or a banking crisis in March and April. No. Then you got the QRA. So over here, Janet gets to decide, on her, no, there's no check on that. There's no political check on that. She gets to decide what she's going to do, and on what tenor, what bonds, how many. Again, it's called the QRA, the Quarterly Refunding Announcement. And most Americans don't know what that is, and that's kind of a sad and pathetic thing that we have to manipulate government spending, bond markets, just to keep the narrative going that for the 60% of Americans out there that have no money left, it's good.
Speaking of manipulation and government data, we have the, big macro catalyst, or maybe it won't be a catalyst, is CPI on Thursday. Oof. Well, first macro catalyst is our themes call at 11 a.m., but then CPI on Thursday. How are you thinking about that one, if at all?
Well, a couple things I'd say, guys. If you show a slide, and I'll give you a little eye candy on. There are 160 slides in this sucker. Okay. It certainly beats having no slides, and it's all data. And the way that we post it is so that it reads like a message board. There's not.
I don't have this one quite yet, boss. I don't have the new one.
Well, just show it's the Tier 1 Alpha data that shows the economic calendar of events and where volatility is trading. So 2 points I'm going to make before we go here. And guys, while you're at it, get ready and to show my. Let's just show it. Let's just show our inflation nowcast here momentarily. But what you see there is short-dated equity vol. I'll draw on that. Can I draw on that, Ethan, or no? Yeah. So short-dated equity vol. Equity vol is U.S. stock market volatility. That is not just the VIX. Okay. The VIX is front-month volatility in terms of its definition. Now here, what we're showing here is this. See this, Jonesy? This line right here.
Yep.
So Wall Street is concerned, so they're buying, this is implied volatility, they're buying protection on this event. They weren't so concerned about Wall Street doesn't care about NFIB. Why would you care about small businesses or small ball people in America when you're big time elite people on Wall Street, right? This is the number that everybody's been focused on for many. There's a mania in CPI watching. So one, expectations are that that's going to be hawkish, okay? Or it might be too hawkish. Two, we don't have to have an expectation. We have our own nowcast. So if you show our nowcast, Jen, run it. When I say that inflation, I don't get on I used to be on CNBC and Fox, and I would never get on and say, well, it kind of feels like inflation could be 2.5, and if I put a multiple like this, and we don't have a hard landing, that's how people talk. Yeah, I don't say any of that. I say our nowcast is 3.16%, 3.13, 3.20, and 3.05. And because I went to Yale, I know all those numbers are not 2%, okay? That's it. So that's why Jerome Powell now has to pivot and not talk about his 2% target and start eventually talking about the real risk, which is, again, many people in this country are in a recession. And all it's going to take is for him to, again, see the actual recessionary numbers, which we haven't seen in plain sight. If you go underneath the hood on all the labor data, you're going to find it, which we'll do at 11 o'clock. But again, if you go, we're already in an industrial recession. We're in a manufacturing recession. So again, as my friend Liz Ann Saunders would say, we're in a rolling recession, depending on what part of the economy we're in. So at some point, he acknowledges that, and it's not a soft landing. And 100% of the time, you might think that that's a buy stock signal, right? Scott Wapner, buy stocks. And it's always, well, how do I buy? Why would you listen to this bullshit, right? Yeah, you got like a reporter from Dallas who did some kind of like local news, and try and antagonize your thoughts on why it's going to be a soft landing or bull market forever. It's bullshit. 100% of the time that you actually enter a recession, bond yields are going down faster, gold is starting to go up faster, the Fed is cutting rates, and stocks go down faster. All right? I'll see you guys at 11 o'clock.
All right. Thanks, everybody. Have a great day.
And good morning from the control room, everybody. I'm Eric Gendron, producer of the Hedgeye Show. How are we doing out there? Thank you to all the new people joining us. We hope you liked what you saw. Go check out our product page, see what all the products that we offer, and want to entice everybody to our education center where you can learn all about the Hedgeye process. And I have to call out Matt Moran, lost a bet to Dan Holland in our media department. Trying to bet on Washington, made the wrong call. Dan's the winner. Have a good day out there. Hope you enjoyed the show. Thanks.